Welcome to the 2023 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Sunday, June 4th, 2023. I know it's been a while. It's good to be back home and not on the road past few weeks and past few months. So I thank you for joining me. We have a lot to get to, but we're going to break it up into segments. So this first segment, we're just going to talk about the labor market and how AI has been taking over, as well as the next Federal Reserve meeting that's coming up next week. After next week, and also the COVID-19 economy, the post-COVID economy. Supposedly, we're out of the pandemic, as you know. Supposedly, it ended. The national emergency ended in May. How things are faring? Are we still there? Or is there going to be another pandemic? We're going to discuss that briefly as well. Please be sure to subscribe to this channel for the latest interpretation of financial news. I'm not a financial analyst, but I do interpret financial news to the best of my ability as a reporter and communicator. Okay, let's get right into it, guys. Ladies and gentlemen, we have right now a surge in AI explosion. This is supposed to be one of the touted as being one of the quote saviors of the U.S. economy. It's this explosion of artificial intelligence, from self-driving cars to self-checkout lines to companies like Alexa, Amazon Alexa, that records and data, open chat GPT. They're investing a lot of money worldwide in developing companies like NVIDIA and these chip companies. The company said they expect $11 billion in sales for the current quarter, led by its position in the AI chip business. So companies like NVIDIA, AMD, Qualcomm, all of these companies that make chips for cell phones, computers, electronics, not only just electronics, but for smart chips for robots, things of those natures. When you use the self-checkout, when you do things like use these different airplanes that they're going to be coming out with now, that's going to be that Sir Richard Branson and other companies are coming out with later on in the future, that allows almost space travel or simultaneous space travel. They use these chips, and so right now these companies are spending a lot of money. As you can see, NVIDIA's logo, company building in China. Different companies, of course, these multinational companies have buildings and employees in other countries like China and Malaysia and Singapore, etc., Taiwan. So what happens is that this is supposed to be the savior, quote unquote, of the U.S. economy from taking us too far. Instead of going to a deep depression, they're saying that the media is spinning it that AI is going to help ease the burden of employees so that we're going to have a mild recession. So it only lasts, instead of a recession lasting only, it was supposed to last 5 years. Now they're saying projected it's only going to last 2 years or something like that because of AI taking over some of the jobs, as you know, in these service economy, hospitality, travel, and also in the labor force and the production, the manufacturing that President Biden said he's trying to bring back. But manufacturing, as you know, it takes a minimum of 10 years to bring something like that back, and we don't produce anything right now but debt and fast food. That's all we see going up in majority of these cities and suburbs. So the labor market surges. Did you guys see the report in May? 339,000 jobs added. So most people are asking, where are these jobs added? Because it certainly wasn't in construction. New home permits fell actually in the month of April, and also in the month of May it was steady. New house, single family home permits. So the construction jobs are hey, they're just not there as like they used to be. You don't see many trailers pulling trailers on the road. You see more landscaping trailers, people cutting grass, care trailers. I see that more, and more mobile detailing trailers than I do actual construction trailers. Anything from masonry to plumbing to electrical to framing, the roofers, stuff like that. I don't see that many trailers around the country pulling that kind of stuff. So they massage the job report once again, and of course, like I said, most of the jobs that they said right here is in leisure and hospitality. Well, that's to be expected. I mean, if you go to an airport, if you've been to the airport the last 2 or 3 months, you've known that it's packed to the brim with people, and this is all this so-called pent-up demand from the pandemic. People are traveling more to destinations, close and near and far, Europe and Mexico and all of that, Bahamas, all that's starting to increase. But here's the problem. Unemployment edged up to 3.7%. Now, we know unemployment is double that. Unemployment right now really is at 7%. Because you're not counting the people that have been disenfranchised from the job market. So that's something too. So inflation also, even though they quoted as going down here in the article, we know that inflation is continuing to go up and maintaining a steady pace. So right now inflation is at 8%. Official numbers are at 4.5%. But we know that it's at 8, 10, 12% guaranteed. And that's something that's going to be the main thorn in the side for this economy when the Federal Reserve meets next June. The next meeting, the Federal Reserve plans. It's interesting. They said, and on the seventh day, the FOMC rested. That's the Federal Open Market Committee. So they observed sort of a sabbatical, a Sabbath, if you will. The next meeting is going to be on June 13th and 14th. After 10 consecutive meetings of rate hikes, all investors are expecting a pause in the rate. This is the critical juncture right here, this June, because remember, we're heading into the second half of this year coming up. And so what do you guys think, ladies and gentlemen? Do you think it's going to be a pause or a continuing rate hike? I believe there's a 75% chance of a continued 25 basis point or 50 basis point rate hike, given the data that the inflation is high, given the data that the economy is still they claim it is still booming, and also given the data that inflation hasn't cooled off. So we're looking at this. They're saying that they're planning on pausing the rate hikes, but we don't know that for sure. Okay, and that's next week, June 13th and 14th is going to be the next meeting, and they're looking for a pause. But regardless of that, we know that these markets are rigged. We know that the markets will go up anyway, even if they don't pause the rates. If they don't pause the rates, these Dow Jones and all stock market will go up because remember, in a collapse, the Venezuela market went up. In a collapse, the Turkey collapsed, the rates went up. In Sri Lanka, when their currency collapsed, their stock market was going up. So a stock market going up is not a sign of the economy. It's totally detached of a healthy economy. It's totally detached from what we're seeing on the ground, obviously in all parts of the United States and in all parts, arguably, of North America, from Canada to Mexico and down in South America. So in Europe too. So now we have tracking the COVID-19 effects on food, housing, and employment hardships. This is where the rubber meets the road. This is a special COVID watch by the Center on Budget and Policy Priorities. This is their research. And they show here in this chart that, and this is something that we've all experienced, no matter what part of the country you're in, hardship fell after relief enacted but persisted in 2021. So you can see that difficulty covering usual expenses continued to remain at an elevated level above 28%. Okay. And when they had the rent moratorium, what is happening with that? They never talked about, there's the rent moratorium, the mortgage moratorium. Has that ended, or has that, as of May 1st and continuing, has that ended, or what are they doing with all these properties where people had the rent and mortgage paused? Okay, that's one thing to look at too, coming after this next meeting. And secondly, the student loan issue, as you know, payments are expected to continue as of August 30th. Sometime around that time, payments for student loans are expected to continue. Now, many people have been forgiven. I know a lot of people have been forgiven or have paid off their loans. That's great. But some of us still have student loans, and those payments are expected to resume from the sabbatical or the forbearance that the government gave us for the thing. So that's also something to look out to too. How is that going to play into the debt load? So right now we have a debt load of $32 trillion and continuing. So the debt ceiling was a farce. As you know, they're going to have to raise debt ceiling because our whole economy is based on debt spending. It's not based on the zero-based budget. It's based on debt spending. So that was a farce. But here's something to look forward to coming up in the next few weeks. We have not only had the Federal Reserve meeting, but we also have to look forward to is whether or not gas prices will go up this summer or not. Gas prices have been slightly falling down, which is good news, with the average of AAA is around $3.80, $3.79 a gallon. So they've been falling significantly compared to what they were this winter, which is so weird because, you would think with summer coming and people on the road, a bunch of cars on the road traveling these highways and interstates, that gas prices will go up. Unfortunately, we have a situation where supply and demand once again. So we have to watch and see, will oil prices go up at the same time inflation go up, or will oil prices crash again and inflation continues to remain a problem? We go into stagflation. So let me know what you think in the comments. Thank you for joining me on this Sunday. Thank you for rocking with me this Sunday. Wherever you may be in the country. And I'll talk to you very soon. God bless. Stay prepared. Stay blessed. And I'll talk to you very soon. Thank you.